Topic for the ticket is how data roll over from financial statements to the current provision form in TRCS. So whenever we load the data, either directly through the application or through the data management, it gets stored in our financial state. It gets stored in the forms, that is tax provisional, national, and forms. Here you will see your book data, that is balance sheet by source and income statement by source. From tax provisional national, go to the forms. In book data, you can find income statement by source. We have seen how rollover can be done of the logics or provisions of anything, whatever you want to roll over from one period to another period, from one scenario entity to another scenario entity, that is to be performed in copy configurations. But today's ticket is how you will roll forward your data from income statement or from financial statement to your current provision form. So if we select our correct entity as operations USD, you can find the data. So these are all your revenue. This is your cost of goods sold. So revenue minus expenses, it will give you the gross margin, and it will show you, it has all the indirect expenses, and we'll reach till profit before tax, which is nothing but 303,990,994. Now here we'll go to the application configuration, and then open the tax automation. Here you can see your tax automation target account. You have your scenario, year and period defined. This is NIBT, that is net income before tax, which is your target account, and here you need to give the logics. Like here the logic given is this logic is enabled, logic is pull. So you want to pull 100% from, this is the source account, so you want to pull 100% from profit before tax account. As we were seeing, this is the account used here is profit before tax, so you want to pull this amount and it should be 100%, and it should roll over to, this is our target account, that is NIBT. Now you need to define what is the source movement and target movement. So source movement, from where you have loaded the data using that movement. So the movement we used to load the data is trial balance close, and the target movement will be automated. So once you define this logic, you will see how you will get the data. So for that, I'll open tax provisional national and package. So once you define that logic in the configuration page, that is at the backend, you need to run console and you will get the data in your current provision form. So scenario is actual, year is FY22, period is P12 for this particular entity, that is operation USD, consolidation is entity total, jurisdiction is all national, multi-gap as local gap, currency as entity currency. So you can see this target account with net income before tax, and this is my target movement that is automated. Here I'm getting 304,99094. So the logic applied was whatever is there in profit before tax, pull 100% of that amount and put it into NIBT with the target movement as automated. So you can see this profit before tax as 303,99094. And now this is the same amount we have pulled and reflected in the target 304,99094 as NIBT, net income before tax. We can check for one another account also. Then this way you need to apply the logics, and you whatever data you want to pull it from your financial statements, whether it is P&L or balance sheet. So you have to come here and apply the logics in which account you want and from which account you want, and how much percentage you want. So logics can be multiple logics are there, like it is not just the pull logic, it is the simplest one. It is not required that you pull 100%, it is upon you want 50, 60, 70, any number of percentage, any number, any n percentage you want to pull it. So you have one is movement logic. So movement logic is you apply so prior year is whatever is data is coming from the prior year, you bring it to this year. De-analyze and analyze, like if you are in P3 you want to go to P12. So first you will go calculate, do the back calculation, you will fetch the figure for your period P1 and then you will multiply it by 12 to reach till P12. Similarly, de-analyze is back calculation. Movement is, so movement logic will be like this month amount minus any period of the last period of the last year. So whatever data is there, that differential amount it will bring, and if on it will apply the 100%, 50%, so whatever percentage you give it. So it depends on the logic, what logic you are defining. Now if you check for some another account, like so this is meals is my target account, source account is meals. It is saying to pull 50% from meals, and if you compare this also, meals and entertainment, pull 50% and bring it to meals and entertainment target account, and target movement will be automated. So first we will see what is the amount in meals from our income statement. Yes, so you can see this is the meals amount, that is 422,898, and the movement, source movement, you can see this is all these four belongs to the trial balance close, and the target movement is our automated, and this is our data input, that is 422,898. Now we have applied the logic as meals and entertainment, pull 50% and bring it to meals and entertainment in the target. So this is my current provision. I'll search for meals and entertainment. This is permanent differences. We'll see in the stat to tax. This is my meals. So the 50% of it has pulled, it is 211,449. So if you see, the actual amount in meals is 422,898. 422,898 divided by 2, because 50% we are trying, so it should be 211,449. So it is coming as 211,449. Similarly with the entertainment, if you check, entertainment is 194,114, and we are saying to bring 50% of it. So 194,114 into 50%. So it is saying 97057 should be the amount it should reflect in the entertainment. So you can see in this way you can bring, you can roll over the data from your financial statements to your current revision by applying the logics, and you need to decide what percentage you want to bring it to. Like if we check for one more for using the movement logic, so this is applied on 100% on bed dates, that is allowance for bed date. So if we go again here, so for that you need to go to your balance sheet, under accounts receivable. You can see this is the allowance for bed debt and it shows 93640 amount. Now the logic applied here is movement, and you want to pull you want apply percentage to be applied as 100% on this source account with the movement logic. So it says 93640 for FY22 P12. Now similarly we'll find the same amount in the last year, the difference of those two amount, that is 93640 minus what was there in FY21 P12. You can see allowance for bed debt for that is 46820. So the difference of these two will be this minus 46820, and this is the difference, and on it you'll be applying the 100%. So you want this amount. Now where you want to reflect this amount to your bed debts. So we'll go to the current revision, we'll search for the bed debts. You can see this bed debt and you can find the amount as 46820. This is what we have calculated. This should be the amount 46820. So in this way you can bring the data, and you can see how the rollover can be done from the financial statement to your current revision. That's all for today. Hope you have understood this ticket.